Good morning, everyone. This is T3 Live Editor-in-Chief John Darsie here to bring you the morning call on a wet, snowy, sort of turning into a rainy day here in the Northeast. The office is very sparse, and I know it's going to be a big storm, so everybody up in the Northeast, depending on where you are, you could get snow, you could get rain. It's much hullabaloo about what looks like it's going to be much of a rainstorm here in New York, but everyone stay safe and stay warm, and if you don't have to, stay off the roads. There's my public service announcement, but anyways, the markets are feeling a little bit wet, cold, snowy this morning as well. S&P futures are down 12 or 13 handles now. They were initially down 8 or 9 handles when we sent out the morning note this morning, but things have continued to weaken. Yesterday what we got was a little bit of a red dog reversal, and I'll go into the chart in a second, but after a really strong 5-6 day snapback in the market, it was prudent not to chase longs anymore, to look for some type of reversal signal. You don't just blindly short, you don't just cost average higher into shorts. But we have the red dog reversal, 80-20 reversal, whatever you want to call it. That strategy that we use to try to pinpoint reversals on an intraday basis. And that's what we got very small yesterday, and it led to some downside follow through in the overnight. But I'll take a look at the chart of the spiders here. You can take a look at it. As I talked about, we had that really nice snapback. We called it sort of a bungee cord, where the market was looking like it might have a deeper correction than we'd seen at all in 2013. And might have, I'm not sure the final percentage, but we had that big extension down, and in 2 days, you could have called that maybe a bear flag, depending on your perspective, but what we got was a breakout above that little 2-day consolidation, and then a really impressive 4-day move higher. Yesterday morning, it actually looked like we might want to continue higher, but that's what sets the stage for a red dog reversal. Trade back up through the previous day's high, then back down below. It wasn't a huge red dog reversal. It led to a lot of weakness during the day yesterday, but we're getting that follow through to the downside this morning. And I'll take a look at the 5-minute, 24-hour to get a view of where the futures are in live action here. So 181.06 is where the S&P futures, the SPY futures are this morning. And so what does that align with? Almost exactly as the 50-day moving average. So that's going to be the level that we watch today to see if we can hold above, to see how strong this rally can be and what type of pullback we're going to get after this snapback. We got this really strong pull-in to start the year, and then we got this really quick snapback. Everybody's sort of in tactical mode right now, not sure if this is just business as usual for the market the way it was in 2013, or whether or not this is the type of bounce that came a little bit too quick and was a little bit too much of a bungee cord, thus maybe something you might look to short. There's different schools of thought there about what this quick snapback means, but overall, as we always do, we'll use our levels and we'll not have opinions and not be stubborn. We'd like to see it hold above the 50-day for composure to stay as bullish as possible. We'd like to see it hold above the 8 and 21-day. If those play catch up a little bit, but overall I think there's not a ton of edge right now. I think a lot of people, if they did try to short on that red dog reversal yesterday, might cover some into this morning, and I think overall people are going to be in a much more stock specific mode, and I'll go over some tactics that we use to identify relative strength and identify what stocks we want to trade in this type of environment. What you really want to do in this type of environment is obviously identify relative strength, but after earnings season in particular, it becomes a little bit easier to do that. And I know psychology tells a lot of people that they don't like to chase stocks after big moves higher, but what you often tend to see is that trends tend to build on themselves, and after a stock gaps up and holds higher on earnings or on news or just on overall relative strength, they tend to continue higher after periods of consolidation. And psychology leads some people to want to buy stocks that are down and look for discounts and stuff like that. There is some mean reversion type trades that are out there, but all in all, we believe that the higher percentage trades are in following the trend on stocks that have been strong, and I'll go through a list of those. At the top of that list might be Facebook. Facebook has been incredibly strong. Hasn't really given you too much of a way in, but after earnings, it did put in sort of a 5-6 day consolidation that led to a nice move higher here, and it's just sort of been drifting higher, sort of in the way Google doesn't let you give you a way in. But if we do get a pullback on today's market weakness, I'm not sure, we can take a look at where Facebook is this morning. Facebook's down at 64.05. So it is getting a little bit of a pullback, not very significant, which could be expected of a relative strength stock. But if we get a move back into the 8-day, maybe there's a short-term trade opportunity. But overall, I would wait for a little bit deeper of a pullback. Maybe wait for that 21-day to play a little catch-up. But Facebook, I think it has a date with the 70s before long, but it might take a little bit of time to get there. Some sideways consolidation before the next leg higher. Chipotle, another one that reported really strong earnings. This one has been consolidating right at highs. This is one that hasn't really gone yet, so I don't think it's been on people's radars as much over the last 2 weeks. But another really nice earnings report, continues to grow, 10% revenue growth, I believe, this quarter. really tremendous and building a nice base right here at previous all-time highs. So this is another one to keep an eye on, and we can take a peek at the 5-minute 24-hour, see where it is, 5:45.75. So it's pretty much unchanged. Maybe some slight weakness could come in this morning, but this is another one that I would look for some upper level follow through. Netflix, another one. It's given you a couple of ways in since earnings, but continues to beat the street, gap up on earnings, and then provide you nice bases to trade off of. A nice 3-day consolidation after earnings, broke higher. A nice about 2-week consolidation after that, broke higher. Then is doing it again. Feels like it could be a little bit hard to chase, but on some weakness, this is an extremely strong stock, still with a decent short interest, so short squeezes could come into play there as well. Under Armour, another one. Really strong earnings report, gap and go to the upside. 2 really strong days, actually. Provided you a nice little pivot, broke out to new all-time highs about 4 days ago, and then putting in an upper-level consolidation here. Let's take a look at the 24-hour on this one. It's down. It's very thin stock, so it's not really printing anything significant in the pre-market. But just watch to see whether it breaks higher or lower out of the upper-level flag. Could be nice on a short-term pullback into the 8-day, but for more prudent entries, I would wait for the 21-day to play a little bit more catch-up, perhaps. GMCR, another one. That big deal with Coca-Cola led to a gap up. Some thought it might fail. It entered some of that gap, but then immediately took it back, which was really constructive, and then has continued higher. A little bit hard to chase here, given how far away it is from the 8-day, but on any significant pullback, I think this is one you could look to be long. Really high short interest in this one as well, around 30%, I believe, so could be prone for a short squeeze. Tesla has been extremely strong. It's not earnings related, but they just continue to produce quality products and good sales numbers, and get a lot of positive press. And what do you know? It's back at all-time highs after that big pullback. Some people were writing off Tesla as leaving them for dead, but really impressive move, and now it's sort of consolidating here at those all-time highs. A little bit more sideways consolidation with the 8 and 21 day is always healthier. You might not always get it, but it is healthier. So we would love a sideways consolidation here at previous highs to be a launching pad for another short squeeze, another move higher on Tesla. Another name to watch. CRM data is not coming up here. Anyways, moving on. But there also are some other setups in the market that aren't all base on base leading stocks that are basing and looking for another breakout to all-time highs. We have identified some laggard trades on off the charts on the price point sheet in Scott's morning note. Twitter has been a great one this week. Twitter obviously really disappointed on earnings. It was their first earnings report as a public company. Still a lot of questions about how they're going to monetize that platform. But with that big gap down of over 20%, people are looking to be buyers here, it seems like. And yesterday it entered that gap with, I think, around a 4% gain. And this is one, let's take a look at how it's faring in the pre-market. So yesterday it closed at 56.85, now it's 56.30. So it's bouncing off pre-market lows a little bit. It's one that I think it's eventually going to fill the gap. I really do. I think the low float, people see what's happening with Facebook. Facebook struggled early on in its public life in terms of monetizing the platform, but then Mark Zuckerberg and that team has been able to really turn the corner on mobile and figure out how to monetize and how to be more aggressive monetizing that platform. And I think you could see a similar trajectory for Twitter, where the opportunity to buy it at lower prices might not last for too long because of that low float, the small amount of shares in the float. I think it's one that definitely could challenge more of that gap, but we'll obviously trade at a level versus a level. Biotech, I'll continue on that theme of stocks that caught up really well, then I'm going to biotechs. Zynga is one that we've been watching, and we actually listed it off the charts last night, a little freebie for you there. Not the cleanest pattern in the world, but you're not always going to get the cleanest patterns in these laggard type stocks. But Zynga is one that looks like it's turned itself around a little bit. We'll look at the weekly chart. You could call it a rounding bottom, something along those lines. I remember during the Facebook IPO, it was up. People were talking about Zynga, $20 stock. Obviously got crushed. But now it's breaking above a lower level base here. And when that happens on a stock that's as highly shorted as Zynga, it can lead to a significant short squeeze and significant percentage moves. Looking at the 5-minute, 24-hour, also sort of thin. Down a little bit this morning, not surprising, but definitely want to keep an eye on today. And then the biotechs. The biotechs is a sector that whenever you get a market pullback, the one that happened a couple weeks ago or some weakness we're seeing this morning, never lose sight of the stocks that you want to own. And a lot of times when the market's strong, you see all these stocks running away from you, you're kicking yourself for not being involved. But then when the pullback comes, when any weakness comes, a lot of people are very hesitant to jump in because they're fearful. And that's, there was a great article, I believe it was Josh Brown, Reformed Broker, wrote it yesterday about the stock market, why people generally aren't successful in the stock market is because when the market's weak and crashing or whatever you want to say, they're scared to get involved. They're scared about how low the stocks can go. But when the market's really strong, people are scared to get in as well because they don't want to be the one that is holding the bag when the music stops, when the musical chair stops. So the psychology in the market is very tough in that way. But the biotechs are an example of a sector that's just extremely strong right now, going through a really good cycle, and I think that'll continue for most of 2014. So what you want to do is make a list of your favorite biotech stocks. It doesn't have to be 10 stocks. Just pick 3 if you're uncomfortable with these low float, low market cap type stocks that are very volatile. Pick 3 of the biggest ones, the most established ones that are pumping out all kinds of different drugs, and look for pullbacks on those, the ones that are acting really strong. And 3 of my favorites there, Gilead is one. Gilead, a decent pulling down to its 50-day there, found nice support, a good 3-day snapback there, still not at new highs. I think it still has some room, and in my opinion, I think you'll see Gilead at new highs here soon. Biogen, BIIB, another one yesterday poked its head above highs, a little bit stronger, but with the market a little bit weak this morning, we'll see where it is in the pre-market. Not really printing much, a little bit thin, but probably going to be down a little bit, maybe one that you look to buy in weakness as well. And then another one, Alexion, that I like, not ALZN, ALXN. Alexion has been even stronger. This is another example of one of those ones that had a really nice gap and go. It was probably on earnings, I'm not exactly sure, but nice upper level base, and then it held in while the market was weak, and then ignited when the market bounced back. And that's exactly what you want to see with relative strength, why we look for relative strength. This one's a little bit hard to buy right now, but on a pullback into the 8-day moving average, a pullback into this base, I think Alexion definitely looks good. But that'll about do it for today's morning call. We're probably getting here close to the open. It's a treacherous commute in here, not a lot of people here, like I said, but the morning call never stops. We'll always do our best to bring you our ideas and our analysis. And everyone, good luck out there today. And like I said, if you're in the Northeast, stay safe, stay warm.